Hello, my name is Tommy Shaw. I just gotta make some adjustments here to see the lighting. And what I'll be doing today is answering questions, trying to get a audience to interact with me, to ask questions, to see what's going on, what do they want to know, and just by asking questions and following me, I will be able to tell my story of how I started investing and how I built my real estate portfolio to over $2 million. And what I'm looking for is people who will interact with the video, ask questions, be willing to take risk, and there is no stupid question. So I really want something to work with. And if somebody can ask questions, then it will be easier. All right, so I will be deleting this video at the end of the session if somebody replays and tries to see what's going on. First of all, um, what are the first steps that I had to do in life to get where I am? All right. So the first steps that I had to take when I was investing, when I started investing, what was the hardest part about investing was detachment from consuming. That was the hardest part because we don't know it, but we have a high when we spend. We have when we go spending and stuff like that, it makes us feel happy and we're addicted to that high. So when you want to start saving, at first the hardest part is detachment from consuming. I know it may sound, but it's the first step in acquiring wealth. The reason why it's the first step is because if you're not able to control how much you're spending, you won't be able to save your money and you won't be able to do anything like that. So that's really the first step that I struggled with. I remember I wanted to buy everything. I love consuming. I love buying cars. Like I had a Toyota Celica when I was young, and that kept on breaking down. And what I've noticed is that we work to have things, and then those things makes us slave to that thing that we buy. Because when you buy a car, you need to save that money. You need to work a lot just to make the payments. So what I've noticed that is that I wanted that car for freedom, but it was making me work even more. So that's when an epiphany came in my head. I said I need to skip the whole process of just spending and I need to save my money. And that was the first step that I took into going in that in that direction. Okay? So the second step was that saving money, okay? When you start saving money, what's really hard about saving money is that essentially when you get to a point where you saved up about $10,000, it can give you anxiety. Okay, that money that you saved can give you anxiety, and it can make you like my point where I started to feel anxiety was around $10,000 when I got to the point that I had at $10,000. Well, that's when I started to get anxiety because I didn't know what to do with it. Everybody told me once it takes money to make money. And what I've noticed is that once I had money, I didn't know how to make money. Like that wasn't true. That it wasn't true that once you have money, you can make money. You don't know if you don't know how to invest, you won't know how to make money with that money. And it's just something that I didn't know before starting to have money. Because once, if you don't have any money, you're not scared of losing your money. And the reason why I was so scared of losing it was because I was scared of spending it. I was scared that I would do something reckless with it. It took me 2 years to save $10,000, and I was scared that I would lose my money. Okay, so that's the second pitfall for achieving success. Now, the third step during the whole process of becoming whatever you want to be, you have to remember your goal and have faith that it will become a reality. You have to have faith because it takes time. We live in a world that we need to put in a lot of energy for something to become our reality. I always love spiritual works because for me, awareness and consciousness, it cannot be separated from the results that you're getting. Because if you're passionate about what you're doing and you have believed that it's possible for you, then it will move you towards your goals because you'll be saving. You'll remember, you'll have a detachment from material. But to have this, you need to have a lot of spiritual work in you. You need to understand what is important in your life. So at any given moment, people can ask me questions. You want me to detail a little bit more because what I really want is uh, an interactive communication. Just see it as a one-on-one conversation. Right now, it's like having me for free, and I've got a lot of results, so I can help people to get the results that they would like to have in their life. Now, the fourth step was learning to invest. Learning to invest was something that wasn't easy for me because, like, just think about it. Investing, it ain't easy. You need to learn the science of making money work for you. And if your parents didn't teach you this, you won't know where to put your money. You'll make mistakes. And the best thing you could do at first is avoid making mistakes because that's going to ruin your account. You only need one mistake to get discouraged and you go back into the consuming world where you quit on wanting to become wealthy and you go back to being average or being like everybody else. And the goal of this channel is to bring you to the next level in awareness. Okay, like enlightenment people seek to actualize themselves. They're not seeking to prove that they have a nice pickup or whatever to compare. They want to become the best that they can in life for who they can become. You know what I mean? Like if I wanted to, I could say, okay, I quit and I don't care. I'm just gonna live off my investments and not become more. But what would be the point of that? There's always something more. There's always something you can improve and become better in. And like this is why I'm doing these videos because it's contributing to me helping myself to communicate better. Because you can know knowledge, you can learn knowledge, but teaching it is another subject because you have to put yourself in the shoes of the person that is trying to understand that information. All right. So learning to invest. Okay, there's many ways you can learn to invest. You can invest pretty much assets are investments. Okay, when you hear the term assets, we're talking about types of investments. Okay, in my channel, I'm not talking in reality because a house is a asset, your car is an asset, but those assets tend to depreciate. Okay, a car tends to depreciate, your television set tends to depreciate. Every short term assets will depreciate in time. Okay, the assets I'm talking about is assets that have the potential to increase in value. What type of assets am I talking about? It could be gold, okay? Because gold, when they print money, gold is inflation edge. So when there's inflation, gold will go up to store its value. We're talking about stocks. We're talking about you guys can't see down there. All right, we're talking about stocks, gold, and we're talking about real estate. It could be ETFs. ETFs have some ETFs will have bonds in them, some ETF will have stocks in them, and it could be a mix. It could follow pretty much any index out there. Like for anybody that's starting out and don't know where to put their money, ETFs could be a good choice because it's low fees and it's very easy to get started in investing in ETFs. Like you could follow the Nasdaq 100, S&P 500. S&P 500 is the 500 biggest companies in the US market. So when you're tracking that, you know you're always getting the 500 best companies that are in the market right now, and you don't have to do anything. Like if you start investing in stocks, you're going to have to diversify. Okay, and you're gonna have, when you're talking about diversifying, you need at least 20 stocks to be diversified to remove the risk from individual stocks. I'm not talking about systematic risk, that's another subject. Okay, so you need to follow 20 companies in, I don't know, 13 sectors, and you need to mimic a benchmark. So you're going to have to find 20 great companies to invest in. Think about it. If you're not working in finance, you have to analyze balance sheets, financial statements. You have to look at all this information. And plus, you have to look at management. You have to look at the macro. You have to look at all this, the potential in the future for that company. Does it have a brand name? Does it have a barrier to entry? So it's going to be very hard to get these 20 companies. Okay, Warren Buffett is a great investor. Like Berkshire Hathaway is a stock that has a lot of stocks inside of it. Like he owns a lot of business. Okay, so when we're looking at this, you got gold, stock, real estate. You could buy taxiing certificates. You could buy your house could be an asset if you live in a neighborhood that's going up and you rent out some rooms. It can become an asset. In the term of, I'm talking about assets that appreciate, just in case people are coming in to see what's going on. And so learning to invest is a science. Okay, this took me the longest to learn. Just investing is the longest because detachment, you have to have patience here, because if you're not making a lot of money, you're going to have a lot of patience to get that money started. And once you get to the point where you have $20,000, then you could buy something with leverage. You could buy real estate. That's why I love real estate, is because when you don't have a lot of money, the best way to get a lot of money is to leverage it. Okay, because when you're leveraging, you're essentially buying a asset that could be worth 10 times the original amount. So when you're buying something that's worth 10 times your original amount, it's easy to make that money grow. So that's that. Is there any questions concerning the information I just said? You want to talk about a certain topic? It would be nice to have a person interact with the information. So yeah, the some of the tricks that I did when I joined the military, because I joined the military when I was 19 years old. I was saving a lot of money. Like people say that it's free to live on the base and stuff like that, but it's not free. It's been taken off your pay, and you have to pay like $600 a month to get food, and you also get your living expense. So it's really cheap. But when you start out in the military, the salary is very low. So what I want to do is I really want the audience to ask questions, because people, if you don't ask questions, I'm gonna have to close down the video and start all over again, because I really want people to interact with the information. I can talk about Anything you would like to hear. Like, I don't know why a person would just listen and not seek to ask question. Um, so what I'm gonna do, I'm gonna look at the market right now, and I'm gonna try to see a little bit of news that I see that's happening. Sometimes we could see that interest rates are going lower, and right now, I don't know why. Uh, I'm looking at the energy sector, something that I don't know why. Something's telling me that it could be undervalued. Remember, this is no financial advice, okay? It's just comments on what I'm looking at and I'm trying to understand because the energy sector is a sector that I've lost a lot of money so far. It's something that I wasn't able to make money, but at the same time, I'm still very bullish. I don't know why I'm bullish on that sector, but people call me optimistic when it comes to that sector. And it's just something that I believe that it might turn around. And if it does turn around, like I see the potential to make 100 times a person's money. So you only need one great investment to get that ball rolling. And at the same time, you don't want to get that hit because once you get a hit of dopamine where you get to the point where you're in euphoria. I don't know if anybody have has ever felt that emotion before, but it's a very powerful emotion, okay? And it blinds all your senses. When you make a lot of money very quickly, it has an effect on the mind. It has a profound effect on the mind where you have a hard time to understand what is going on inside of you. It's very annoying, okay? Because when you're euphoric, you have a hard time to sleep. And it's like almost, I'm never talking cocaine, but I believe you could compare it to cocaine, okay? You have to be careful and not getting that hit because you'll want to have it again and you'll want to invest again and that's where you're going to lose your money because you have to invest in something that is sustainable. Like real estate is sustainable for the long term. Everybody's always going to need a place to live. Inflation is something that you can invest in. There will always be somebody that's in printing money because printing money is easy, okay? And you do devalue the price of the currency, which makes the appreciation of gold. Okay, it only looks like gold is appreciating, but in reality, it's just conserving its value. Okay, hopefully that makes sense. So yeah, exactly. Right now, oil has been going up for a couple months now. It's almost at $61, and like it spiked up from almost it was at $52 at one point. So I'm very bullish on oil right now. I really think that oil would have the potential to increase in value and stocks in that sector could really increase in the next couple of years. But remember, I've been investing for a couple of years, and it's very hard to time the market. It's very hard because markets can stay irrational longer than you can stay solvent. Remember that, okay? Markets can stay irrational longer than you can stay solvent. And if you don't understand that, the problem with that is that you could be buying at the right time or the wrong time. You could think it's the right time. Maybe it is the right time. But the problem is that when you're buying something so cheap, it only has to devalue a little bit for it to lose a lot. Like When you're buying something at $1 and it goes down to 50 cents, it's only a 50 cents drop, but it's a 50% drop in your portfolio. Like on the other hand, when you're at $100 stock and it goes down 50 cents, it's not even, it's a 5% drop. You won't even see it, okay? And it's not even a 5% drop. It's because $500, $5, it'd be like a 0.5% drop, okay? So always remember that when you're buying something low, there's a good chance you won't be able to handle the emotions that come with buying something low. Okay. That's something that I had to learn the hard way when I was investing in stocks because I was buying very, very low. And what I didn't know was that it gets very volatile when the price drops. And if you're not used to that volatility, it'll make you go crazy. Okay. So be careful when investing in stocks. It's something that's very unpredictable. It's a market. Sometimes you think you understand it, and what investing in stock is, it's very. It pulls you in. Okay, it makes you believe that you're smart because sometimes you're gonna be right on a stock that you're buying, but the problem is that your stock is going up, but not for the reasons that you think it was going to go up. Does that make any sense? So essentially, that those are the steps that I've taken over the years to get that ball rolling. And once it's rolling, it goes very quickly. Like it's just to get it rolling. It's just to get because at first you're pushing a ball up a hill, and once it picks up that momentum, it goes by itself, and then you're being compensated for all those results and actions that you taken in the past. And most people don't get to that part because it takes 2 to 3 years. Like everybody that I hear that achieves success, it's always a minimum of 3 years, 3 to 5 years, 3 to 5 years doing something. But you have to do it in something that has that potential for exponential growth. Because if you're doing something like a business and it's attached to time, you're exchanging time for money, and there's no value that's being created in the future. That what I'm talking about is not going to work. You have to put it in something that is going to give you the value of exponential growth for the future. All right. So, exactly what I'm looking at right now is I'm on investing.com and I'm looking at the macro, trying to understand what's going on. Just a little bit of information. Like every day, I keep my mind very sharp and I just want to know what is going on today in the market. Like, if something's going on, I want to know because I want to be ahead of the game, like Tesla and stuff like that. I need to understand what is going on. Like right now, pre market, what is moving in the pre market. But what I recommend is that anybody who's starting out, don't really, I don't really recommend stocks for the reasons that it's not individual stocks. It's hard to be consistent. Okay, when you don't have control over something, it's hard to be consistent. And right now, Micron is going up. Chesapeake Energy. Chesapeake Energy is a stock that I'm looking at right now. I really believe that fractional thing there that just came out. I think it's gonna be positive. I think that's gonna be have a very positive effect on stocks, because if you can buy something for 1/10 of a price, I think it's gonna push everything higher. It's gonna make it a massive bull market, because imagine you could buy everything for 1/10 of a price. You get 1/10 of a stock, and I think it's gonna be very positive. And maybe it's even more than that, because you're creating that fractional. So a little price increase from the bottom will make a big price increase from the top. And I really believe that it's going to be very positive for the markets. If anybody disagrees, it might be very positive for the short term, but the long term, when it bursts, maybe it's going to burst a solid bubble. Like, I don't know. You have to remember, if you're pushing something very, very high at a level that you can buy at 1/10 of a price, and 1/10 of a price, if you're willing to pay 10% higher or 5% higher or 1% higher, it's going to push that price 10% higher on the other end, because it's almost like a multiplier effect. Because if you're willing to pay a little bit more when it's lower, it's going to be a lot more at the real price. So that's what I'm thinking about. I'm thinking that it could be very positive in the market. Exactly. So the markets are pretty positive. The same thing with China, the China trade deal. So far, the last time we got news, they were telling us that a trade agreement would be done, and then they were bullish on that, and then they said no. Trump confirms China trade deal. December tariff canceled. It's very hard to get the truth right now. Like, it's almost like everybody's manipulating the market just to try to get us involved in becoming emotional. So yeah, exactly. So it's very, like, I just feel like they're just saying anything to make the stock move, and what they want is attention, because if when you're getting that attention and everybody sees that attention, you're essentially, you have an impact on the market, because if people are listening to you, you are essentially influencing their decision and environment. Some people just follow whatever people are saying. And if you're somebody that follows what other people are saying without questioning anything, because you just assume that they know more than you, what's gonna happen is that it's gonna become a self-fulfilling prophecy. It's gonna become your reality that you're living in. So exactly. I always like to look around. Like, not too long ago, there was the repo market. The repo market was, they were injecting money in the banking system because the overnight lending had a liquidity crisis. And that's always something that I try to understand. Why is there a liquidity crisis? Well, what people were saying was that some people are just afraid of other banks, because what they're trying to say is that the assets that people own don't really own that asset. That is, like, the stock that you own, somebody else might own the same stock. So everybody's saying they have more assets than they really have, but in actuality, this 2 to 3 person, or maybe 10 person in the same bank would own that same stock. So exactly, like, it's something that can be scary, because imagine you're lending money to a person and he says, I got this much assets, but in reality, like, he has a bolt in his yard and he says it's paid cash. You say, okay, I'm gonna give you a loan, and I'm gonna take that bolt into consideration. I'm gonna attach that bolt to the loan. But what you find out after a while that it's not even his boat. It's somebody else's boat. Because when you were looking to see if they had a loan on that boat, he didn't have no loan. But what he didn't tell you is that it's not even his. So you just made a loan $20,000 on somebody's boat that you don't even own, that he doesn't even own, and you don't own. So if that person doesn't pay you, you're not getting that money. You're not getting the money that he just paid. And so it can be scary. Like you know what I mean? You just took all your money and you put it into something, and you're like, wait a minute, that's not even his money. That's not even his boat. Okay, so that's essentially what brought the liquidity crisis, because banks were like saying, what you have on your balance sheet, we don't believe it. We don't believe what's in your balance sheet. So we're not going to make you a loan because we don't even know who owns that asset. And what happens is that in that market, it's very hard to trace who owns money to who. And it's something that updates very quickly. And you always need to have the accurate information because no banks are willing to take risk on somebody else's problems. Like remember in 2006, that liquidity crisis, when those big banks were going bankrupt, that's essentially what was going on. There was a liquidity crisis in the market. So hopefully that makes a little bit more sense. Now, I always like to look at what is going on, and there's a lot of good news right now in the market. Even though last year everybody was a pessimist, I was a pessimist. I don't I can't say that I wasn't a pessimist last year. I would be lying if I didn't say the truth. I was a pessimistic. I was very scared of the market, and I've went full on defensive last year. I bought bonds, like because a lot of people don't know this, but bonds, okay, there's not only the returns that you get from the coupons. There's also the returns that you can have from the price fluctuation of the bond. It's just something that a lot of people don't talk about. A lot of people don't talk about bonds because bonds can fluctuate in price. And the longer term bonds that you take with the lowest interest, the duration will increase. Okay, the duration is the fluctuation of the price of the bond. So a 1% decrease or increase, if you have a duration of 33, this is a price fluctuation of 33% in the price of the bond. So people say bonds are not risky. They're not risky if you hold it to maturation, if to the end of the loan. Then you have a secured bond. But if you look at the price fluctuations of the bond, the value you have in your portfolio will change drastically. Okay? This is why people hedge their positions with bonds. When the market is high and people anticipate that interest will go lower, that's why people convert their money or start investing in long term bonds. And those long term bonds, when interest falls, the price of the bonds increase to compensate for the fall of stocks. Okay, a lot of people don't know that. You talk to old people, and people don't even know. Like, imagine if you were investing in 1980 and buying bonds, okay, and the market is going down and down and down and down. Those bonds are gaining value every year because back then you could get bonds at 12% return per year. And today, if you get a 1.5, 3%, it's the most you can get. So imagine how much money the baby boomers made in the 1980s. But a lot of people didn't know that. A lot of people were not even investing in real estate in the 1980s. Okay. Everybody was talking about real estate back then. But some people were just elusive. and didn't even know about that information. I don't know where they were living, maybe under a rock, but when you're not used to seeing opportunities or living in opportunities, well, that's something that might happen, okay? So that's that for that. So far, I was pretty right with looking at the market. I was anticipating a great increase. I was anticipating a great increase in. So, what I will do is I will take a 15-minute break and I will come back in about 15 minutes.